Let's shift focus now to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, there's one area which has continued to gain, and that has been base metal prices. And within that sector, it's copper prices holding around that 22-month highs. We have seen prices from a low of this year of $8,900 come up to $9,800 a ton on your screens. So we have seen prices gain up by 4% in the previous week, and it's 14% up in the last 1 month itself, clearly leading the rally there. And if you look at the copper as a barometer for economy, well, you have seen strong numbers come in for this one. The latest data today, the China holding loan prime rate steady, is something that the street was anticipating after the move that we saw, especially in the month of Feb. But there are various other reasons for the copper prices to continue to surge higher. There have been large capital inflows within the commodity. We have seen those reports of output cuts. Raw material shortages are key drivers, the reason that the prices have been trading on the higher side. Also, the green energy transitions has fueled the demand going forward. That is what the estimates are doing right now for the prices as well. The sentiment itself has been baked into the prices there. Demand from AI-related electric equipments, data centers has been on the stronger side. The street also is looking at China copper smelters, where they have pledged an output cut of 10% in 2024. The output cuts in various mines is something that continues to grow in sense of a list there. Zambia mines have been shutting output because of power shortages there. You have Panama's Cobre mine shutting down. South African mines have failed to meet their 2023 guidance itself. And various mines, whether it's Codelto and Antofagasta, have been cutting production in the first quarter of 2024 itself. And that is weaving its way in case of prices. Also, take a look at the kind of hedge funds and money managers long positions that have built in copper on the back of fundamentals. That is at multi-year highs as well. So there is a very bullish view going forward in sense of copper. Trafigura, which is one of the largest brokers of copper in the world, says that there is underinvestment and they do see a deficit of a larger quantities by 2025 and 2030 as well. There also are experts suggesting that 5 to 6 million tons of deficit is what you could see going forward. Demand in AI is also estimated an additional 1 million tons by 2030, and we haven't seen that kind of copper supplies come into the market. Add to that the kind of reports that we've been seeing from Citi and Bank of America talking about $10,000 a ton of copper in this year and an all-time high of $12,000 in the next year as well. That is what is keeping a lot of people interested and holding longs in this space.
All right, Manisha, thanks very much for that. So copper is doing very, very well. Calls for shortage, bigger shortage into 25. We'll take